Our next guest says rotation to value and quality names can be summed up in 3 words: a melt up. How sustainable is this rally then? Let's bring in Marcus Bogdan from Blackmore Capital in Melbourne. Marcus, pleasure to have you on the show. The melt up is real though. We have seen rallies across the globe. Largely, a lot of the guests have been talking to today saying it's looking quite toppy here, overvalued. What's your take?
Well, a couple of weeks ago when I was on the program, we were talking about the large dispersion between growth and value. Growth was trading on a median PE of 30 times. Value was at 12 times, and that was the biggest gap for over 20 years. And in the last 2 weeks, we've seen an extraordinary turnaround for value and cyclicals. So there is a bit of catch up there with better health news, better economic news to justify some of those rises. But now I think it is too far and too stretched now, and I think the more interesting aspects are now going back and revisiting some of those growth defensive type of companies.
Do you have any specific names you can maybe speak to when it comes to these attractive propositions for the growth and defensives?
Sure. So in the last month, we have seen healthcare underperform this rally. But we do think that there are sort of cyclical and structural elements to an improvement in volumes there. Most particularly, I think Ramsay Healthcare is of interest. Last week, we spoke to 3 different hospital groups and sort of understanding how that they can get back those volumes in the next 3, 6 and 12 months. There was a huge cutback in elective surgery. Capacity utilisation in hospitals went back to around 25%. That's moved up to 50%, and I think in this 50%, and I think in the next month or so, it will go to 75%. And by year end, the capacity and the catch-up will be at 100% for the private hospital operators. A second element, which is I think is structural, is that there's a public and private partnership now. Public are not doing elective surgeries. Outpatients have been curtailed substantially. So a lot of the volume work will now be pushed into the private sector, and there is an enormous backlog there. So I think that the outlook and the growth and the recovery in private hospitals and the way that we can invest that in the Australian market is through Ramsay Healthcare. It was interesting, though, that costs have risen with PPE, and they're seeing costs are elevated around 5 to 10%. But I think over time, I think the volume growth will drive further efficiencies there.
So what else are you watching? I mean, because a lot of the clarity, we've been talking about it a lot today in terms of the earnings vacuum, a lot of the clarity won't come for markets until August, until we get earnings from a lot of these companies. Are you somewhat holding steady or holding tight until you get more clarity on companies, or are you willing to sort of take a punt before then?
Well, I think in healthcare, you can actually granularly see how that can pick up. With the federal government and the state governments allowing elective surgery going back. So that is definitely more measurable. There are other parts, and I think it is a worthwhile consideration. There are other parts that are less transparent, and I think we'll need to see what happens particularly with JobKeeper, with these rental concessions, and then the August reporting season and what those forward statements will look like. And so there is an element there of uncertainty in large parts, and I think you'll only see that sort of consolidation in those views in August. But then I do think in areas of healthcare where you can see a gradual increase there in volumes.
I did hear an interesting note this morning. Someone was basically describing the Moore's Law equivalent when it comes to healthcare, where healthcare should really become twice as technically proficient on a year-on-year basis going forward from now onwards, given the prices that are being valued into some of these stocks. Is that how you're seeing the industry, not just from the short-term play, but from the long-term play?
Well, long-term play, I mean, we still very much like the thematic of an ageing population and the greater use of healthcare services. I mean, these companies will have to manage their growth. They're still restricted by social distancing, so there will be imposts there on efficiencies. There may need to be more work done in after hours and on weekend. But we are relatively confident, as long as we don't get a second wave of the pandemic, that those volumes can be restored and then over the longer term underpinned by very favourable demographics.
Other than healthcare, are there any particular sectors at this point in time that really do look particularly attractive in the near term in these markets?
Well, I think the bulk miners, particularly BHP and Rio, with their absolute quality of delivery into China and iron ore, and it's an essential product there, which is having difficulty sourcing, particularly from Brazil. I still think that is a very strong thematic, but it's now starting to be factored into the price recovery that you're both seeing at BHP, Rio, and Fortescue at this point in time. There are a range of high quality cyclical companies that we're keeping a very close eye on. James Hardie, JB Hi-Fi, for example, but in the short term, I think that they're overextended, but certainly those ones are worth putting on the watch list if there is a retracement.
All right, in terms of opportunistic M&A, are you expecting much of that going forward, or do you think that'll be something that happens later in the year when we get a bit more clarity from businesses? What do you see when it comes to M&A?
Well, we just before COVID, there were a number of stocks that we were looking at which were at or in an M&A play, and it'll be interesting to see whether those groups come back into the market at this stage where they've got greater clarity, and we also seeing particularly in Helios or Ramsay with their most recent rights issue, the ability there to have the funding in place to look at an M&A going forward. So I do think there'll be consolidation opportunities across the board, but I think there are some key examples in healthcare, maybe in Ramsay, and certainly with Helios with the divestment of their general practice businesses.
Marcus, always a pleasure. Thank you very much for your time today.
Thank you very much. Cheers.